It's Friday morning, the 3rd of February, about 9:30 in the morning, and I want to run through a bunch of markets because this week has been jam-packed with economic news and announcements from central banks in the U.S. and Europe, and the employment report, and all kinds of things going on here. To see how the market's reacting, because there's been some confusion in the markets as to whether or not to take Mr. Powell seriously or the Europeans seriously. So, where they raised the rates, but not by as much as they could have. So let's just see what's going on here in these markets. Just real run through the markets briefly. The on the 10-year notes, of course, the biggest credit market in the world, just huge. After a little bit of indecision in the morning, the Treasury market has broken down pretty significantly. We're right, if you might look at it this way, in congestion here on the weekly. Closes above the PL dot and then bang down below. The 6 ones, these little cyan dots, come into play. The 5-1 comes into play. I wouldn't expect to see a whole lot more downside for the day, but look at how this is rolling over. The weekly momentum is definitely rolling over, and we see on the monthly why that is, because we have the quarterly PL dot pushing down very strongly. We're at that resistance, so a rally up to higher time period resistance and a reaction to it. Now we'll see what happens here. We have the monthly PL dot coming up, but I rather think we're going to see a retracement back down here to the quarterly PL, the quarterly bottom. So let's just see what happens on this. But big day, but contained still within the geometry. Okay, let's look at let's look at the NASDAQ. Now, the stock market is kind of shaking this off. There was an initial reaction to the downside, but it didn't go anywhere. And it's, let me get my arrow here. What's going on here? Where's my arrow? Here's my arrow. Okay, the market started out with a reaction to the downside from a close here, came down here and then back up, holding rather well. The bull trend is holding rather well. But will we see it go much further? I don't think so. Here's the weekly 5-2 up here that it's reacting to. I don't think we're going to go too much further. Also on the monthly, we see that it's risen up to the monthly and yearly PL dot. We're just touching the yearly PL dot, and I would expect to see some sideways movement here at the minimum. But we'll see what happens here. If we move over to the S&P, we see a very similar move, of course. Possibly, and S&P we're above the yearly PL dot and moving on up rather strongly. Again, we hit resistance here. I think this is it for the week. On the Dow, the Dow is much less convinced here. We have this this congestion action going on here and here, and on the monthly we're not making any progress. We're going sideways. The monthly's rolled over. This is a little ominous here. We could see this move down, but it's not doing that yet. Look at silver and gold, a very decisive move to the downside on silver and gold. So the idea that inflation is going to be contained by rising interest rates seems to be being telegraphed by both the 10-year note and the silver market here, and the gold market you'll see as well. Kind of decisive moves here. So instead of protecting against inflation, we're we're seeing the inflation expectations back off a little bit. On the higher time period chart over here on the monthly, we see that this is an exhaust formation, right? Stopping in the further out and then holding in the current bar. So stopping in the further out, holding on the nearby the current bar, and retracing. But look at what's happening here. It's retraced as much as it's gonna here, it looks like to me. It's a little early to tell, but this is a very strong up move, broken through the quarterly PL dot and moving up very strongly in the matrix of support and resistance. So I think that maybe we're going to see some sideways movement here rather than, I don't think we're going to see this. We might. I don't think so. The dollar, it's very slight strength today, some reaction off this very long downtrend. We had seen this forecast because the bars had been losing momentum and moving sideways on the weekly for the last couple of weeks. So we had this this big sideways congestion, a test of support, and then moving back up. It was high time because it's this huge down movement. I'm not at all surprised to see the dollar coming back up here. But look where it stopped now. It stopped at the top of the weekly envelope, and we're at the monthly live dot here, so we'll see how this resistance strength holds. This could be just a dash to the upside, and we'll see it go down. But the market is saying that the dollar weakness is overcooked right at the moment, anyway. So copper, Dr. Copper, we call it, because of its tendency to forecast strength in construction and industrial production. Well, pretty significant rolling over on the daily and on the weekly. The weekly is now in congestion. We see those 6 ones kick in. Similar on the monthly, we see an exhaust and then a stop. This could definitely roll over. It's a little uncertain. This market's saying, well, maybe there's going to be a recession after all. Crude, I keep on thinking of Mr. Medvedev, who says we're going to be up here at 150. I don't think that's going to happen right away, but this market is definitely the down move is slowing. Down flow is weakening. You can see that, right? So we're closing up higher, and these bars are going sideways. We're not making new lows. In the week, we've had a congestion here. I would think that this congestion is not going to be too long. We're going to move back up into this range. Okay, that's kind of like a survey of the markets. It's 8 minutes now. It's way longer than it should be. But that's my thoughts right here at this moment after this very busy week. I'll talk to you again soon.